everyone, welcome to another daily analysis, October 19th. Right now it's almost 7 o'clock Eastern Standard Time, so let's just get into what happened today. First thing first, we start the day with average earning data and the climate change. It's both data from UK. Now the both data was actually quite positive. The average earning was in line, but the climate change was way better than expected. However, it was not outside the deviation, so I personally did not trade anything as if there's no surprise. But it's a very good data to support British pound, and that's a fundamental data. So far, we have quite a few good data coming out from UK. However, that does not mean that it's going to change the fundamental view for UK, because everything is still up in the air in terms of what's going to happen between this divorce, because it is a divorce basically from UK to Europe. And then moving to normalization, New York Station will have a most important thing is the rate decision coming from Canada, which was actually as expected. But the conference, the press conference, the statement was actually quite dovish, because they actually came out and said that they are considered to further easing the Canadian dollar, because the exporting was not doing well. And as mentioned before, when a country wants to basically boost their exporting, they will always try to devalue their currency. So in order to make the currency become cheap, so that they have relatively more competitive edge in the global market. So that's basically what happened. So regardless of the crude oil inventory, today we also have the crude oil inventory actually have a large drawdown of, I think, negative 5 million something. That's actually a very good sign for the oil market. And if you see, the WTI actually shoots up today with closing very high above $51.50 per barrel. But that did not help the Canadian dollar, because the central bank comment. Now you see that's exactly, you can see how exactly when you have a very positive, doesn't matter if it's a data, doesn't matter if it's an oil market, that's supposed to help a currency. But as long as the central bank come out and say something negative, that's going to take the most important value. That's going to be most weighted in terms of any other thing. So always keep your ear open for any central bank comment, any policy maker. Now of course, they are not all equal, especially sometimes you have this Bank of Canada or Federal Reserve. There's so many members, they'll come out and say this and that. So you have to come out from important figure. But just keep in mind that if you have a comment coming out, that can completely reverse whatever position or whatever a normal situation that should be. And that's what happened today. Normally when WTI oil market goes up, normally when we have a positive news for oil, we should see Canadian dollar going up. But today it actually dropped significantly, and that's because the central bank comment. Very good lesson to learn. And fundamental data wise, the China have GDP data last night, and also the industrial data. Now, the GDP data was in line, which is very good for, as I mentioned, Australia and New Zealand, and then also US. These are three very large trading partners with China. The industrial production data was slightly negative, but not as much impact in terms of the market. Sentimentally, as I already mentioned, WTI goes up, and what happened is the equity market was mostly green as well. So it's still a risk-on sentiment day, and that's still providing a very good support for commodity currency such as Australian dollar and New Zealand dollar. Normally, it's very good for Canadian dollar, and it was good this morning. It shoots up right after the crude oil inventory was a drawdown. But as soon as we heard that central bank comment, it went down right away. So that's pretty much what happened today. I didn't mention any other thing, because in the European market, we are still dancing around this, British pound, the parliament and the government. Tomorrow we're gonna have a comment from ECB, and that's gonna providing us to see the future of euro, because the ECB, there's few important things they might do. They were already say that they are considering to tapering their purchasing program. So tomorrow we're gonna know more detail about that. Now, if they are going to tapering that program, of course, that's going to be very positive to the euro dollar, and that is going to affect the euro dollar. If they are not going to tapering, or if they are, but the market don't think it's good enough, then that's also going to be very negative for the euro dollar. But we're going to see what happens tomorrow for euro dollar, and that's going to affect the whole European market. The US market, besides Canada, the US dollar was basically nothing really happened today, and news-wise, still around the presidential election. I think the last debate is coming up this week somehow. I don't know. I didn't really follow the US news. But the last debate is coming up, and that's going to be a deciding factor. Then November is going to come. They're going to have a new president for the United States. Now, it looks like Hillary Clinton is taking the lead, which in turn should be a positive news for US dollar. But we never know. Like, as a trader, you never know how market is going to react. So we don't really pay too much attention. Don't bet on this kind of thing. But just watch out to see that's going to affect the US dollar for sure. Other than that, stay tuned for my chart analysis. And you're going to learn more about trading currency market.
So first thing first, let's take a look at our current trade, Euro Aussie. And once again, we are keep selling the euro dollar. Of course, a very good news for us. But as mentioned before, I'm kind of worried because I haven't seen any reversal or rebound at this moment. And just remember, when you look at the trend, it's never going to be a never stopping trend. That means that it's always going to be up and down in the case of uptrend. So, when you see something that is just going the straight line, and more often than that, it's going to be extended. That means we call that overextension. Now, when anything is overextension, then you have a lot of factor into the market. But at the moment, the emotions will always be more than logic. That means when you see something like this, this is not the real smart money. They come in at this low point. Then what happened is at here, the last extension often trap the uneducated traders. So a lot of people will actually getting at the highest high and then lose money. And that's always the case, it just keep repeating itself. So when you see this kind of overextension, even before all this range bound, you sort of already know that, it's gonna end. It's either gonna end or it's gonna pause for a moment. But you have to remember that we are not buying a stock market. So the currency itself has no real fundamental value, right? As you see, you're buying Euro Aussie, basically you're buying Euro dollar and selling Aussie dollar. So it's always a versus. You're buying one, selling the other one. And that's why it's always going to be up and down, It's never going to be a currency pair which just keep going without going down to touch the support. So in our case, I haven't seen any rebound to touch the resistance, and that kind of gave me worry because it's just saying that right now the overextension is due for a rebound, but I don't know how strong that rebound is gonna be, because a real healthy long-term trend is you have a very adequate up and down movement, and those are the trend that I really like to see. So hopefully we'll see the rebound soon. That is not too large, then we can continue holding this trade. Other than that, the reason why we keep the euro dollar keep being sold, of course, first of all, we have a huge reversal in the British pound at beginning of this week until now, due to a very good data coming out from them. And also the general risk sentiment has been on from Monday till Wednesday today. Now, the third reason is because on Thursday, the ECB is going to come out and finally make some statement. Now people are awaiting to see whether they're really going to tapering their bond purchasing program. Now what happened right now, that means that they are buying bond non-stop, unlimited, well, not literally unlimited, but they are buying bond in terms of monetary policy. However, the ECB came out, I think 2 weeks ago, saying that they are considering to tapering it. That means they are going to reduce the quantity of their bond purchasing. And what's that going to do is going to reduce the available cash in the market. Essentially, the money supply will be reduced, and hence that's going to be a good news for euro dollar. So this selling could be the last extension, that maybe it's a hedge fund coming, maybe it's somebody else, maybe it's people profit taking, whatever it is. That means that tomorrow the story might change, and it really depends on the tonality. It really depends on how the ECB is going to make that statement. So just watch out to know that tomorrow that's gonna be a sort of a big impact for euro dollar, because up to now you have to understand that there's no data coming out from Europe that's going to affect euro dollar. Basically, it's just a non-reactive currency at this moment. So tomorrow 8:30, the ECB's press conference, that's going to play a key role for the direction of euro dollar. Now, of course, we will see what happened. And right now we are risk-free already, but of course I don't want to lose all this good profit at this moment. But I also don't want to get out early if the comment was not really, if the comment is not positive, if it's somehow negative. And that's the interesting part about trading, is that you always have to measure both sides of the story. And a lot of people coming in with 100% convictions, thinking that, you know, they are going to be right. And I used to be like that. But now thinking back, you know, you gotta understand, in this game of probability, the bad thing you can do is arguing for both sides. So even though we are shorting Euro Aussie, I'm still going to arguing the reason that people might want to buy Euro dollar. And by doing that will actually give me an awareness of the risk. So I know what's coming ahead of me, and I wouldn't be panicking, or I would do an adequate measure to mitigate that risk. So for now, I'm looking at myself as a person who wants to buy Euro dollar, who wants to actually buy Euro Aussie. And if that's the case, I'll say, hey, first of all, I need to hear some good news from Euro. And then that's going to be really, really good news to transfer the effect. So right now, I haven't seen that. If I'm going to, for example, if I'm the one who's going to buy Euro dollar, I don't think it's the right timing for me to enter. But I also think that it's a good risk reward ratio if I want to buy Euro. So for example, if I go to Euro dollar today, still, you see, it stopped dropping for these few days. And if I'm a person who wants to buy Euro, this is actually a pretty good zone for me to buy, technically. So that means what's going to happen is tomorrow, if I have the fundamental back me up, then this will be a reversal place. And then let's take a look at Euro Pound. And pretty much same story, because I know although it's not really obvious, but you take a look at here, we are very close to this kind of support zone. So if I'm a person who wants to buy Euro, that's actually a good place. And take a look at Euro Newsy. Same thing. We are actually all at a significant zone. And that's just something to keep in mind. So don't be surprised if your winning position reverse. But that's also the reason why we always, you know, tighten our stop loss along the way. And that's also the reason why I don't like to lock in my profit per se. Like I don't like to have a profit point, especially in daily trade. It's because you never know how low this is going to drop, right? So you don't want to limit your cap, and then a lot of time you might get whipsawed. So anyway, it's many different reasons to take into considerations, and just, you know, you'll learn through your way of trading to understand more about it. All right, so let's get into our 28 pairs. Okay, just give me 1 second. All right, let's take a look at Euro dollar first. So Euro Pound, as we already mentioned, right now people are selling Euro dollar. Of course, we don't know the reason. Maybe they're expecting tomorrow the ECB comment to be negative, so they want to get in now. Or it could be completely different story. They are actually expecting the ECB comment to be positive, and they are trying to bring down the price to a certain level so that the hedge fund trader can get in. And that happened many times over and over again. So actually you have to understand the consideration of the very different scenario, but that could be all possible. Now EuroCAD, you see, actually have a very strong reversal signal. It's very strong. And of course, CAD today, as mentioned, it was very strong at the beginning because the rate decision was on hold, and plus the crude oil inventory was a large draw, and that all helped the oil market, which also helped the Canadian dollar. However, after the conference, they're actually saying that they are considered to stimulate the monetary policy. And what does that mean? Is that they are going to artificially devalue their currency, and they haven't done it yet, but they are considered to do it. Of course, that's very negative, very dovish news for Canadian dollar, and that's why you see this kind of reversal signal in EuroCAD. So just by looking at that, pretty much I know that Canadian dollar is going to be the weakest currency today, because euro is already weak, and you can see that Canadian dollar is even weaker than the euro dollar, right? So let's finish our euro analysis first. So euro New Zealand, same story. Euro yen, same story. But now we will have more clear direction tomorrow after the ECB conference. Pound Swiss, of course, today we're saying that British pound should be relatively supported because the good news coming out from them. However, you have to understand that if a currency pair does not go up even when there's a good news, then that's a very worrying sign for you to know that it's going to go down, right? We already have 2 days of good news from British pound, but that did not reverse the position. You can pretty much see that everything's in the range bound. So what happened is that you're thinking about this way. The good news is like a medical care. It just stops the bleeding, right? It does not make this person become healthy. It basically just stops the bleeding, but the wound still there. So what happened is that the British pound is still going to be largely sold. It's going to be sold off very soon in the near future. Right now, we only need a piece of negative news or a piece of negative data for the pound to drop. But we haven't seen that yet. On the contrary, we saw a lot of good data, and that's why it stopped dropping. But don't be confused saying that, oh, it's going to reverse. No, it's not going to reverse. It's just stop dropping. And any moment when we have a negative news, it's a moment you can sell British pound. That means that the trend is going to move down again. Okay, that's what I think, and that's my analysis for British pound. Swiss yen, again, range bound, nothing particular. Dollar Swiss, again, range bound. Dollar CAD, again, another reversal signal. This is actually very attractive for me to enter, because I do always like, I mean, last days ago I was saying that, this is already a good reversal signal, but I'm not going to enter because I'm going to wait for Canadian dollar. And today, I feel like this is actually a very good reversal signal. Now, a couple of reasons is because, first of all, US dollar is still fundamentally strong than the Canadian dollar. Second reason is because the oil market is going up, but regardless of oil market, because if you look at WTI, we have a very strong market today, but that does not affect the Canadian dollar at all. And as mentioned before, a lot of people think that oil market is the largest sector in Canada, which is not true. Of course, the largest sector is still service, but in which service? The largest sector in Canada is actually real estate. So what happened is that you see a diversion coming out from the fundamental news. Right now, we actually witness a lot of time when the oil market closing very high, but the Canadian dollar actually closed down. So the diversion already happened. That means that people actually pay more attention to the fundamental strength of Canada itself. And now since today, the central bank already came out stating that they are thinking about further stimulation. And that's already a very weak statement. So now we only need a technical entry, and now we already have it. And on top of that, what are we buying? We're buying US dollar, which is a rising star at least for 2016, because people are still betting that in December they are going to raise the interest rate. So all these factors is already give me a probability that is better than 50%. Now I don't want to say how good, because I don't know, right? It's a probability, but already give me enough confidence to say that, hey, that's a pretty good thing to enter. So I will do further analysis in this pair later on. I'm just going to write down first. So just understand this is in my radar. So if you want to know, of course, you can go into my current trade code if I decide to enter or not. But personally, it looks very nice, very attractive. But I will do further analysis later on. Okay, so let's keep going to our analysis. 28 pair. Just give me 1 second. Okay, back here. All right, so dollar yen. Again, a range bound market today. Now, not surprised, as you know, it's not it's a risk on sentiment day, which is not particularly a day for US dollar. Aussie Swiss continue to see Australian dollar gaining strength. Look at this. Continue to see it gaining strength. And Aussie CAD continue gaining strength for Australian dollar. Aussie yen. And it all looks very nice, but as I say, I'm kind of worried that things should have a reversal for Australian dollar very, very soon. CAD Swiss, same thing, reversal signal pretty much in all Canadian dollar pair. But that does not mean we will sell all the reversal signal. You have to also understand, you have to compare the strength of the currency in the fundamental base and sentimental base. Only if you have these two factors, then the technical entry becomes meaningful. Otherwise, it's just a guessing game. Now, a lot of people argue, say they don't need any other data, they just trade technically. And I do believe so, but if you want to do that, you do it in the shorter time frame, right? Because if you do anything that is more longer, like a daily or weekly, then the fundamentals start getting a more importance in terms of your analysis. New Zealand Swiss, New Zealand dollar, New Zealand CAD, and New Zealand yen. So pretty much you can see that New Zealand dollar is still quite strong, and it's just funny, you know, how people were trying to sold them last week because of the sentiment that they are going to cut interest rate. But as I mentioned, New Zealand dollar is still very attractive, still very high yield currency, still very stable in their economy. So even if they cut interest rate in November, I still think it's a worthwhile pair, a currency to buy. So I am looking forward to buy as soon as the interest rate is cut. So I want to see that stable, the risk factor to be removed. Then we're looking to enter and buy again. But right now, you know, I'm staying out just because with the events is coming soon. So that's it for today. And as mentioned, only thing that's on my radar is the dollar CAD trade. And just to recap, because the fundamental factor is that the Bank of Canada coming out today saying that they are considered to further stimulate their monetary policy. That means they are going to devaluate their currency. That's the first thing. Second thing is that the US dollar continues to be the strongest currency, and the December rate meeting providing a lot of probability for them to hike rate. So if all things are equal, dollar is stronger than Canadian dollar. US dollar is stronger than the Canadian dollar. And technically, we have a very strong reversal signal today, which touch all this area. And if you're looking at the long-term perspective, we also have this strong support of 200 EMA. And we are generally overall in a historically uptrend, but a short-term downtrend, and now in this range bound since whole 2016, since after April. So we are actually in this range bound area. Actually, let me draw something. So you'll see this is highest here, right? Since we are in this range bound, that's what we are. The highest high and the lowest low is actually here, I'll say. Because we go down, we go up. And if you want to do, you know, you can always feel free to use some technical tool like draw a Fibonacci line. And, you know, all these things, just don't get sucked into it. These things are good. They are very, very nice for you to see. But don't get sucked into it. Treat it like a holy grail. They're far from that. I look at that. That 61% was exactly at the support, at the resistance I just drew. So providing that this is actually a very strong area. Now, if that's a very strong area, then that gets me to worry. Now, why? It's because then I don't even have a one-on-one ratio, you know, before I hit my area. So that's why I'm worried always, you know, if I know there's a strong resistance. But nevertheless, I still think it's a worthwhile pair to enter. I will do more analysis later on and put on my trade call. Other than that, you know, happy trading, play safe, and tomorrow we'll come back with another analysis. Thursday data, the important one will be the retail sales from British pound. Again, if it's a negative deviation, I am looking forward to sell ASAP because I'm now just looking for any negative data to drag British pound down. Then we also going to have the European the rate decision and conference. That's providing going to be very important for euro dollar as well. And other than that, you have unemployment claim and manufacturing index from US, which is really not a tradable event, but it's worthwhile to take a look at it. Other than that, okay, happy trading. I will see you tomorrow. Thank you very much. Bye-bye.